Okay, guys, welcome to today's. Okay, guys, welcome to my YouTube channel once again. And today we are going to learn about the basic principles of smart money concept. And this is for beginners who want to learn the basics of smart money concept trading. So I will talk about few things that you will come across in your trading journey if you want to be a smart money concept trader. Number one is order block. Number two, break of structure. Number three, as you can see, chalk meaning change of character. There is number four, liquidity. Number five, imbalances. Number six, FVG meaning fair value gap. I will briefly explain the meaning of each one, and I will show you on the right side. I've drawn a rough representation of a chart, which will help me explain to you for easy understanding before we go to the real charts. So, number one, order block. Order block means is an area where big institutions place their limit orders awaiting to be executed. It is an optimized demand or supply area. So, in short, an order block is just a demand or a supply area where big orders lie, the institutional ones. Well, so show you I will show you how an order block looks like. There is a bullish and a bearish order block. Now, I hope you're seeing my chart. On my chart, from the explanation of an order block, is just optimized supply or demand area. So in this case, as you can see my mouse, this one is an order block, and it is a bearish order block. A bearish order block is the last bullish candle that forms in an upward movement just before the move to the downside. So in this case, this one is an order block, as I've marked here. This one is an order block. It was mitigated by this move. Let me show you another example. Another example of a bearish order block is this last bullish candle before this drastic downward movement. Well, then let me show you a bullish order block. Example of a bullish order block is this one here. The last bearish candle before the move to the upside. This one is a bullish order block. So usually the big institutions place their buy bids on these bearish order blocks. As you can see, price can mitigate this order block and then moved upwards. Well, let's go to the second principle, BOS, the break of structure. The break of structure means, or rather occurs when price breaks above a structure level after a corrective move. It indicates that the market will likely continue in that direction. So let me show you here in this rough drawing of mine. When price breaks above a structure level, in this case, price broke above this high, of which this one is a bullish move. So this one will be a high, this one will be another high. So price broke this previous high, forming another or new high. Now this one becomes a break of structure. And I will show you how to mark a valid break of structure, because not all break of structures are valid. There are key things that you should consider before marking your break of structure. So price broke this previous high, went up, came down again. This one is a corrective move. Then went up, broke this new high, forming another new high. Now this one becomes our break of structure. On the charts, let me show you break of structure here. Let me use this. I've already marked my charts for you to easily understand. Like in this case, price broke this. We are on a downtrend. Now price broke this low. As you can see, this candlestick closed below this previous lower low. So this one becomes a valid break of structure. So usually after valid break of structure, as we explained, it indicates that the market will continue in the direction that it is currently moving to. So in this case, we are on a downtrend. After this break of structure, it will be a confirmation that the trend is still downward. So I'll come mark my order blocks above this break of structure, and the fair value gaps I've not explained. Yeah, so that's it. I will explain when we reach there. So as you can see, there are several break of structures to the downside. Well, next is change of character. Change of character occurs when price breaks below the lowest point of a corrective move. In a bullish scenario, occurs when price breaks previous low, while in a bearish scenario, it occurs when price breaks previous high. Let me show you here. Now, we were on an uptrend, and then this one was a higher low, higher low. So price broke this high, mitigated. No, sorry, price broke this high. Then this one is an inducement here. It came down, broke this higher low, which was the last corrective move to the downwards. So after breaking this previous higher low, change of character, as we have said, it indicates that the market is changing direction. So we were on an uptrend. After this change of character, the market has confirmed that we are going we are going to start the market is going to change to a downtrend. So as you can see, after this change of character, the market moved up, mitigated this extreme order block where the big institutions have placed their bids, awaiting to awaiting for them to trigger. So these extreme order blocks are usually high probability ones. Now, after price mitigated this extreme order block, it's a nice zone to take an entry. We're not learning, I'm not showing you how to take entries now, but I want you to understand the basic principles that we are discussing. Now, after price mitigated this extreme order block, went down, broke this structure. This one will become our higher low. This one becomes our lower low. Now, after price breaks this lower low, it is a clear indication that we are after the change of the trend from an uptrend to a downtrend, we are going the market is still likely to continue with the downtrend. Well, price broke this low, lower low. Then That's why I've marked here as a break of structure. Price moved up, didn't break this structure, moved down. Then this one becomes a valid break of structure. Moved up again, broke this. Oh, this one is not. This one is an internal structure, so this one is the valid change of character. Sorry. So this one is not a valid change of character. This one is because price. This one is the higher low. This one is the lower low. Confirmed lower low. So price broke this higher low. A clear indication that the market is changing its direction from a bearish one to a bullish one. So price went up, dropped, then formed an equal lows. Equal lows is in SMC, equal lows indicates liquidity. I'll explain to you what liquidity means. Then price came down, mitigated, failed to mitigate this extreme order block, but then reacted to this fair value gap. I will show you what fair value gap is, and then moved up a bullish direction. Now, that's a change of character. Liquidity. Liquidity basically means large amount of money or orders. Liquidity fuels the movement of the market. So the market needs liquidity for it to move. And in SMC, we have different types of liquidities. We have trendline liquidities, equal lows, equal highs. Then we have sell side liquidity, buy side liquidity. So it's up to you to spot where liquidity is for you not to be liquidity itself. Now let's go to the chart. I want to show you some examples of liquidity. Now, as you can see, this one is a rising wedge. I think, yeah, it's a rising wedge. So, as an SMC trader, I will look at this as trend and liquidities. As you can see, price came, took out this high, this move, this candle took out this high. I took this trade. I will show you how to trade, how to spot easily liquidity and trade them effectively in the next video. So, after price took out this previous lower high, I took the short entry. Yeah. So those are just the basic principles of smart money trading. And I made this video because of the beginners who are interested in learning smart money concept. I hope this video has been useful, and I will make more videos on each of these topics separately for you to understand very well, because this is just a beginner. This is just a beginner class that I have made specifically for beginners. So let's meet in the next video. Thank you for watching, and I hope it has been helpful to you. Hit the subscribe button and the notification button too. Thank you.